Our next guest is looking at the various possible outcomes of the 2020 election and how they could impact the financial markets. One of his bottom lines is whether the government is united or divided. He thinks that's going to be extremely important. Joining us right now is Michael Zezas, who is Chief U.S. Public Policy Strategist at Morgan Stanley. Michael, a divided government, that means basically gridlock. Nobody gets a full mandate?
Yeah, more or less. We're talking about a situation where the president comes from one party and at least one chamber of Congress is controlled by another party. If you're looking for an analog to what that looks like, it's basically what we're experiencing right now. It's what we experienced through most of the Obama administration. So if you're thinking about this from an investor perspective, if, for example, we get asked questions a lot about can we get a preemptive fiscal stimulus to kind of help the cycle move along, I think you should sort of take that out of your equation. The divided government outcome more or less keeps the fundamentals of the economy as is, and however the cycle is turning, it keeps moving in that direction.
I can understand why, that's long been thought of to be the safest thing for Wall Street, that you're not going to get huge change one way or the other. And given how the two sides are becoming more extreme in what they're proposing, I can understand why that would be important. However, I think what's changed over the last decade or so is probably the use of executive order. That has gotten to be a much bigger issue, and a lot more can be done just from the White House alone.
Yeah, so I think that's fair. I just think that's a little more of a sector story as opposed to a big macro story.
You mean like drug prices or something along those lines?
Yeah, so I think if you are thinking about just Republican versus Democratic control, I think you should be looking at sector performance on a relative basis for financials, energy, and healthcare. But from a macro perspective, we're talking about which types of outcomes lead to GDP uplift, which types of outcomes might lead to Treasury yields moving higher. I think unified outcomes on both sides, which sometimes can be surprising because we find a lot of investors kind of conflate party control with GDP uplift or downtrend, and we're saying it's more about unified or divided. Unified probably is a more positive delta to GDP and to Treasury yields.
What are the odds that you think we get a divided government?
It's hard to say at this point. I mean, everything is so wide open with who the candidates are and what the polls say. And at this point in 2015, the polls were quite wrong about who the leaders were. At this point,
were quite wrong in the month leading up to the election.
Well, and I mean, I think the broader point is you tend to polls tend to underappreciate the incumbent this far out. If you look at what you had in 2012, if you look at what you had in 2004, what the betting markets would tell you that divided governments are highly likely. I think what the fundamentals of the race would tell you is that there is a status quo bias, right? It's unlikely that the Democrats could lose control of the House. Getting control of the Senate's a heavy lift. Democrats need 3 seats. There are basically 3 toss-ups available to them. And they have to defend a seat in Alabama. So that also tells you, by the way, that even if they get control of the Senate, a lot of the policy ambitions of some of the Democratic candidates are probably going to be moderated, at least.
Right. When do the predicted type, does it get liquid enough to really be indicative of what's happening? When do you start believing it?
Yeah, for us, the over-under probably around April. Or really, when you get the Democratic candidate, that person becomes a lot more clear because you get a big enough body of polling evidence that some of these third-party models actually start tracking, or the betting markets start tracking them pretty well. I think that's a relatively good indicator of what's
It's weird now that the highest, I don't know if you follow it, but the highest Democrats at like 17 cents or 18 cents versus 43 for Trump. But the predicted model for who wins the White House, a Democrat or Republican, is like 53 cents Democrat. So
yeah,
you'd have to add 3 of them together to get to 53.
I'm just guessing that.
So eventually, whomever becomes the lead candidate, that starts creeping up to more.
Well, I think that's fair. I think the electorate is so divided that almost regardless of who the Democratic candidate is, they're going to have a fighting chance of winning the presidency.
No matter who it is?
Yeah.
Elizabeth Warren could win the presidency.
I think a real generic Democrat, regardless of who it is, because
it's not always an advantage that it's generic Democrat. In this case, it is because there's no single Democrat that the entire party can coalesce around. The left needs one, the middle of the party wants somebody else, the right of the party wants someone else, and you need almost a chimeric candidate at this point.
I think what 2016 taught you is that there's a number of different paths to win the presidency, right? There is the path where you can persuade moderates and suburban moderates and not necessarily activate your base. There's a path where you could activate your base and get more voters that way. Effectively, that's the play that Trump ran in 2016. Right. I don't think that avenue is available.
Generic candidate, i.e. Democrat, which one is generic enough to fit that mold, in your view, at this point?
Well, so I don't know, and this is why I actually think that the guide that we put together, that we published at the beginning of the last week, is incredibly important, because to us, the candidate specifically is less important than the total government outcome and the policy path that generates. And so as a consequence, even if you had someone further on the spectrum as the nominee, I think you're probably likely, even in a unified government scenario, to have a policy path that is net stimulative, at least from a fiscal standpoint, because the sort of more popular initiatives generically for Democrats are the spending ones. The less popular ones are the tax raising ones. And so you can get a partial funding as opposed to fully funding of anything that you have.